Do you think US will be beaten down one day? Not allowed to be beaten. They are the number one so far. They cannot be beaten by China, cannot do this, cannot do that. But is there a chance for this to happen? As investors, I think understanding risk is the thing that we can control. This is why I'd like to bring you on this journey of understanding what happened previously. And let's take a capsule right now and then we're going back to the past. So the thing about Japanese economy is that they were once so successful, but one mistake happened and resulted in them to have that lost decade for 30 over years. For a country like Japan, the second largest economy back then in 1980s, they themselves also went from a high into a big decline as of now. So why is this possible and what does this mean? Right, let's find out a little bit more. Okay, so if you were to look at the history of how Japan actually in their economy actually worked, right? Back then in 1980s, you can see they have been in the top second economy in the world, and this is because of the export dominance that they have, right? And why is this the case? Because back then they are known for having a very successful or thriving manufacturing sector, and not only that, right? They produce a lot of all these world class cars, right? The Honda, your Toyota, I don't know. Back then, all the racing car models came from Japan, right? And then when we talk about Japan stuff, we also talk about quality, we also talk about that technological innovation. And back then in the 1980s, I haven't been born, but what I heard from my more senior friends, right, is that they are considered like the high-tech kind of space. They're always there. People have known Japan for that. So that is a key reason why the products are so good, the quality is good, and then that's why the export of products out of Japan is extremely high, and they dominated the economy back then. Not only that, right, this was actually in addition to the lose money policy. So why is there a lose money policy back then? Because the Bank of Japan actually wanted to lower the interest rate so that they can boost the economy. They also can encourage people to borrow and of course invest in Japan. So this is attract more investors to come into Japan to further make more investments and also grow the whole Japanese economy. And because of the loose monetary policy, people are able to borrow easier. And because of that, like recent months, right, you can hear that, wow, the interest rate so low. So what happened? I can borrow money from Japan. Then I use the money I borrow, I go and buy in US stock, let it grow. Then after that, then I sell away, then I return back the debt, and then I made a profit. Right, the yen carry trade happened thing came out, right? It's like history repeating. So because of that, money was easily flown out into the economy. People can borrow, people can invest, right? That result in a lot of people going into investments, right? That's where the boom in terms of the real estate as well as stock market, because people started to have too much money, they can just spend and spend and buy, and this actually make the whole market to be very speculative already. Right? So it's very similar, and by I think around 1989, this is where the Nikkei index right actually went to its peak. Wow, people are going crazy and just buying and hoping it to go higher and higher. Right. So with all of this in mind, the reason why people dare to even borrow money or why banks even allow investors or like people to borrow money and they even lend out money to those people that are considered high risk. Why the banks are willing to do so is because to them the country is doing so well, right? We have dominance over the export market. We have technological innovation. People are coming in, right? People are investing in our country. So naturally, it's okay for me to lend out money so that I can get more returns, right? This is what the bank will take. So what happened next is that after a few years of this kind of behavior, so the inflation rate is over here. It started to trend upwards. And similarly to what the Feds have done in US, right? What do you think the Bank of Japan would want to do if they saw that the inflation rate is going high and it went up to close to 5%? What would they do? Right. So what they will do is similarly to what the Feds have been telling us what is their job, right? Which is to increase the interest rates, right? So to curb the inflation, they decided to raise from 1.5 to 2.6 all the way to 6%. That is a close to 2 to 3 times of increase. Maybe same as CPF interest rate. And suddenly, wow, you put in the bank can earn you 6%. Wow, don't need to buy risk already. Put all the money into into the bank. Right. So when this happened, people will want to liquidate their money, all their assets that they've either earned from the stock market or from properties, liquidate it put into a safer asset class, as what we mentioned just now, right? If there's an asset class that's safer, you put inside, right? No brainer, right? And after that whole increase in share price, naturally people want to sell, right? Because they all know that, wow, this is bubble. Where's the bubble? Where's the bubble? Where's the bubble? Where's the bubble? Oh, is this the bubble? No, no, no. Oh, so could go up. Oh, okay, we sell here, we sell here, we sell here, right? So with that in mind, people started selling either to return the debt or to cash out the profits. And when this happened, it's not just one person, it's not 2%, it's not 10%. It's the whole economy, or everybody that's participating in this whole situation started to sell. And what happens when the sellers are more than the buyers? Share price or the property prices will go up or go down. Sure, go down because everybody want to sell. So now it's the buyer can keep buying lower and lower and lower. So when that happens, the sharp turn in the share price, in the property prices came down. Not only did the share price or the property prices start crashing down, think about the bank's perspective. Wow, back then when the market was so bullish, we lend out so much money. Even to high risk people, we also lend out. But when this happened, right, people start pulling out, and when the interest rate is so high, right, do you think the people who borrow money can pay back? All the corporates that borrowed money so that they can grow, so that they can scale, right? And without doing proper financial management and risk management, right? Wow, they overspend. They don't have enough resources to pay back the bank, right? So it became to a certain extent that to the bank, right, it's like, wow, GG. We lend out money, it's kind of like a investments to grow these companies, right? But then now these companies all cannot pay back money. That is like a liability to them. They term this as like the zombie firms, right? What does this zombie firms mean? Right? It means that these companies, right, are still surviving on, can survive, but because of the bank support. And the reason why the banks still support them is because they know that if they were to close off their shop, right, they have zero chance to earn back that money. It's like they know the person sick already, but don't to cut loss because they told that, hey, still got chance. And the reason is because back then, because of this whole situation, nobody wants to invest outside of lower risk asset classes, right? So naturally, if these companies they don't put some chance in them, right, all this will be written off, and then this will look not so good in the balance sheets of the banks. Yeah. So all these firms are there as a liability to this bank because the bank cannot collect all these loans that they initially lended out. Because of all these reasons, the whole economy started going to the deflationary mode. So you can see that it went, I even circle like negative zone. So now what this means is that inflation, last time it's inflation, right? Means prices go up, right? But now it's deflation, where the prices keep going down because nobody want to spend. So what this means to the economy is that now it's $5 cai fan, right? Your economy rise $5. Why people say expensive, don't want to buy. Okay, okay. $1, you want to buy or not? Ah, still expensive. I don't know that. Okay, 250, 250. I still want. Okay, 150, 150. Right. So the prices of products or services start to go down because they have to survive, right? They have to get customers in the first place. Right. So that scenario back then is a bit similar to what happened, like what Kong said, like the China property side. Right. So the economy was very stagnant for a while, and it took them like I think 20 to 30 years to recover, right? And that is the one of the bigger events that happened in Japan, we call the asset bubble burst, ABB. So this is just Japan. This is just one case study, right? So let's look at other case study. Argentina, right? I just quickly go through it. Argentina back then in early 20th centuries, right? They are very strong in terms of their agricultural exports. And they became like one of the richest countries globally back then in the 20th century. And to the extent that back then, right, their position, right, is rivaling to France or even like Germany, right? So back then, these are their competitors, like, in a sense, right? And the reason why the country did so well is because they have good land, the lands are fertile, and in terms of the export of agricultural products like your beef, your wheat, all this stuff, it's also very strong, right? There's a lot of outflow, which means that they can sell more, they can actually boost the whole GDP situation in Argentina. And back then, they started to modernize quite early, and they also like gather a lot of foreign investments, right? So you can see that like they started to even build up like urban centers to hype up the whole area lah. Okay, but for Argentina's case, right, the unfortunate thing of like economic mismanagement. So what this means is that over the past few decades, right, they actually didn't control the inflation very well, right? And not only that, there's some currency risk and some of their debts actually went defaulted, right? The political side of things is also not very good in terms of having a lot of military coup, right, where people start to riot lah, all that turmoil stuff, right? So the policies that the policymakers make are also quite inconsistent, right? Which means to say, right, wow, if you are an investor that put your money into Argentina thinking that it will grow, then suddenly this government body, right? Today say ABC, then a few weeks or a few months later you come back and review again, right? Then suddenly you realize that the policies that they make no longer ABC already, now XYZ already. Do you think as an investor that you put in your money, right, you'll be worried? Wow, this is exactly like what a lot of investors are feeling about Chinese companies, right? Wow, I thought like, wow, Alibaba go very good one eh. Then suddenly got the common prosperity. Then suddenly need to give this, give that. After that, need to pay all the fines because of antitrust, all this stuff. Wow. As a participation of all these investors, we already feel that pinch. Imagine the companies actually paying billions of dollars to set up plants, set up like all the tech stuff inside. Yeah, you can go and flip your roti prata or roti canai already, right? Right. So because of all these reasons, the investor starts to pull out, and people started to question why should they look into Argentina, right? And not only that, Argentina back then was like the leader in terms of the agriculture space, but obviously over time, right, the nearby countries or the other areas or other countries will also start to improve in terms of their agricultural technologies, right? So naturally, it kind of like eat away the market share of Argentina's exports in terms of the wheat, your beef, all this stuff. Okay, so this is also one clear example that what a country that is very strong in certain areas can also go under, right? And you can see that if you were to compare the GDP with the previous competitor, right, which is like Germany, right, is like far, far away already, right? So whether US will happen, very hard to say. Right. Another one is this Venezuela, right? Pronounced correctly. So this country is also once it was a thriving economy. Why? Because they have a lot of oil, right? And when you have oil back then, right, you are like the king, just like Saudi Arabia. You got your Iran, you got your US, all these places with oil reserves, one, right? As long as you got oil back then, because that point of time, no one have thoughts into going to clean energy or like it's too early on already. Right. So if you have oil, you're kind of like growing very well. So for Venezuela case, right, is that they over rely on oil because you know that hey, we got the oil reserve. So of course we will naturally rely on oil to export and also grow the economy. Right. So they build up a lot of all this oil production infrastructure stuff so that they can sell more. And along the way, if you can see that this green line, right, this green line is actually the prices of the oil. Okay. So back then, right, the good thing about Venezuela is that when they sell oil, right, they also have another friend. I don't know whether they call it friend of enemy, but at the start it became a friend to them, which is the oil prices going up. Right. So back then, everybody seems to want oil, right? So the demand increased, the prices of oil per barrel also increased. This resulted in the GDP to actually go up, which is a good thing for a country, lah. Right? So there's a lot of revenue surplus. So everything was good. Everything was going well until when the price of oil started to come down in around 2011. So what happened here? Right, because of their decision back then, the government's decision to rely heavily on oil and not diversifying into other areas of the economy, right? That is when things start to go wrong when the oil prices start coming down because the reliance on oil is so high, right? Anything that happens to the price of the oil will naturally affect the whole economy's GDP. So you can see that the GDP started going down. And not only that, to make things worse, what happened in Venezuela is that there's also some corruption cases or some mismanagement in the government body, right? So the government wasn't very effective, and then they misused a lot of all these resources that they could have put back and also help to turn things around in the economy, right? So this resulted in hyperinflation, right? So we talk about inflation being scary, but for their case, it went into hyper state lah. So that's even crazier. Things start to go out of whack, right? The prices start going crazily, and that's where as a country, your currency actually devalue crazily, right? So today maybe the ratio is like 1:2, and then suddenly it become like 1:10. Wow, so it means your value of your currency suddenly decreased by like 5 times, right? So this is where hyperinflation can be very scary, and as a economy, we will try to do and prevent this kind of things from happening lah. That's why you can see that even Bank of Japan, they have been trying to curb all this inflation because of this kind of situation. Okay, yeah, so it was so bad until that they have to have like external parties to come in as like humanitarian to support for this to help a lot of people to escape from poverty. Okay, so this is one other example. So now that we have looked at the history of successful economies going from bottom, go up, and then they crash again, right? I just wanted to give you guys some, not say warning, not to introduce fear, but I think the potential for these things to happen to US is definitely there. I know that US is like the everything is pegged against the US dollars, but with recent updates of like how countries like China and Russia are finding ways to depeg themselves or not so rely on US dollars, right? It kind of put investors out there to be more mindful about things starting go south lah. Okay, so as you can see, this is a source from Goldman Sachs, right? So this was back then in 2022 lah. Right? And what they were doing was that they are tracking like the top 15 economies around the world. And then just now we talked about Japan, right? From second, it become third, and then moving forward, I mean, what they postulate is that it will go into like the sixth, and then even further down to 12. And this is like, I mean, very far on ahead. Like, these are all predictions, of course. But you can see that even for US, right, the outlook that they have is also not that strong. So whether US will be beaten down, I don't know, but of course I don't hope to see that happening right now because my portfolio is all in US. Which then brings us to why we should consider like investing not in US only, right, but the world, right? So the reason is very simple, right? I've mentioned a few times, which is on the risk management, risk profile, risk allocation, right? And it's about diversifying not just in terms of the stocks holdings, but also like country specifics. So I do still see that US being a very big contributor to a lot of growth in the global outlook, but just wanted to take into consideration of the smaller players, the emerging markets, which one day they will definitely grow. And if you want to diversify, I think now is the best chance to do it because they haven't grown yet. Right? When they have grown, then it's kind of late lah. But it's really more about the risk management perspective.